Have you ever wondered why some traders make profits year after year while others keep repeating the same mistakes? Is it because of their strategy? Or their software? No, the real difference lies in their mind. Trading isn't just a game of charts or numbers, it's a game of self-mastery. And that's exactly what Brett N. Steenbarger's legendary book, Enhancing Trader Performance, explains. In this video, we'll go step by step to discover how understanding your psychology, discipline, and behavior patterns can turn you into not just a better trader, but a consistently profitable performer. So let's begin a journey where your mindset matters more than your charts and where the real victory happens within you. Chapter 1. Every trader is a performer. Think about it. What's common between a trader and an athlete? Both have to make decisions under high pressure. Both need practice, discipline, and mindset. And for both, consistency is the key to success. Brett Steenbarger says, trading is a performance discipline, not a purely analytical one. Meaning, if you want to consistently perform well in the market, you must see yourself as a performer, someone who sharpens their skills every day, learns from every mistake, and analyzes themselves after every trade. The one who wins in the market is not the one who just finds setups, it's the one who keeps upgrading themselves. In this chapter, Brett explains that a trader's biggest enemy isn't fear, greed, or overconfidence. It's the lack of self-awareness. Most traders don't even know their strengths and weaknesses. They just take entries after spotting a signal. But professional traders track their behaviors, emotions, and decision patterns. That's why Brett says, every successful trader is a learner. The real edge in the market isn't in strategy, it's in your ability to identify your mistakes and refine them. Now think about this. If we treated trading performance like a sport or an art, could we become better every day, even though the market is unpredictable? Have you ever written in your trading journal, not just your trades, but your behavior and emotions too? If not, maybe that's where your real transformation begins. Chapter 2. Developing expertise as a trader. In this chapter, Brett Steenbarger says something very profound. Great traders are made, not born. That means no one is born an expert. They become one through practice, feedback, and adaptability. The real learning process. Trading is a learning profession. If you're not learning every day, you're falling behind. The market never stays static, so your skill can't either. Brett explains that every expert trader goes through 3 phases. 1. Novice, beginner, trades based only on patterns or tips. 2. Competent, average, understands some things but lacks consistency. 3. Expert, professional, adapts to every condition because their mind is trained. The path to becoming an expert isn't easy, but it's predictable, because every expert follows a structured learning system. Practice versus performance. Most traders stare at charts all day and think they're practicing. But Brett says, practice without feedback is just repetition. If you're repeating the same mistake again and again and not analyzing it, you're not improving, you're just stuck in a loop. Successful traders review every trade. Was my entry correct? Was my exit emotion-based? Was there any bias in my setup? These kinds of questions make your performance measurable. The importance of self-coaching. Steenbarger says every trader should learn to become their own coach, because no one can understand your psychology better than you, and no one can give you honest feedback like you can. Self-coaching means treating your mistakes not as punishments, but as learning data. Just like an athlete reviews their performance video to improve, a trader should analyze their journal, charts, and thought patterns. The continuous improvement mindset. Markets change, strategies expire, but the mindset that adapts is the one that survives. Steenbarger writes, if you are not evolving, you are not surviving. Trading is an evolutionary process. Those who are rigid will fail. Those who are flexible will endure. Now here's a question this chapter leaves you with. If trading success depends more on mindset than strategy, does our brain work against the market or for it? Chapter 3. The role of psychology in trading. Brett N. Steenbarger says in this chapter, trading is not just about predicting markets, it's about managing yourself. In other words, the real battle in trading isn't with the charts or the market, it's with your own mind and emotions. Trading is a mental game. Every trader believes they need to understand the market, but in reality, they need to understand themselves. Because the market is always neutral. It doesn't want you to win or lose, it just reacts. But when you overreact, that's when losses happen. Brett says, it's not the market that hurts you, it's how you respond to it. Losses don't scare you when you're prepared. They scare you when your ego steps in. Fear, greed, and ego, the 3 big enemies. Steenbarger explains that every trader faces 3 psychological traps. 1. Fear stops you from entering or forces you to exit too early. 2. Greed makes you take unnecessary risks. 3. Ego prevents you from accepting losses. These emotions can destroy even the best strategy. That's why Brett says, managing emotions is managing risk. Self-awareness, the mirror of the mind. When your mind becomes reactive, your decisions become impulsive. Steenbarger advises every trader to recognize their emotional triggers. For example, do you revenge trade after a losing trade? Do you become overconfident after a profit? Do you panic at market noise? If yes, then you're fighting yourself, not the market. Self-awareness is the first weapon in that battle. Don't control emotions, channel them. Steenbarger says, don't suppress your emotions, direct them. Fear can make you alert. Greed can make you ambitious. If you channel them properly, they can work for you. You can't remove emotion from trading, but you can train it to work for you. The psychology of recovery. Every trader faces losses, but the one who recovers quickly becomes consistent. Brett explains that blaming yourself after a loss doesn't help. You must determine, was the loss emotional or systematic? If emotional, train yourself. If systematic, train your system. Now think, if the market is always unpredictable, is there a way to make our mental stability so strong that market uncertainty doesn't affect us at all? Chapter 4. Developing Emotional Stability. Brett N. Steenbarger says something very deep in this chapter. The best traders are not those who never feel stress, but those who have trained themselves to stay calm within it. That means true professional traders are not fearless. They're the ones who make the right decisions despite fear. Market uncertainty and mental strength. Uncertainty is the very nature of the market. You can never know where the next candle will go. But Brett says that uncertainty is your greatest teacher. The market doesn't test your strategies, it tests your stability. If you crumble after every loss or fly high after every profit, the market will keep knocking you down until you learn to remain emotionally neutral. What is emotional resilience? Emotional resilience means keeping your mind balanced in every situation. Steenbarger compares it to a muscle. The more you train it, the stronger it becomes. He says, you can't control the market, but you can control your reactions to it. So when the market falls, you don't panic. You calmly think, what level was my risk? Was this move part of my plan? Mindset shift. Don't see problems, see patterns. The second secret of resilience is to see losses not as problems, but as patterns. If you keep making the same mistakes, like rushing entries or exiting out of fear, then that's a pattern in your mindset. Brett says, when you identify patterns in your emotions, you begin to take control of them. When you observe your emotional behavior, you start gaining power over it. Practical ways to build resilience. Steenbarger suggests several practical exercises to strengthen emotional control. 1. Journaling. After every trade, write, how did I feel at that moment? This helps you identify emotional triggers. 2. Breathing techniques. Deep breathing calms your nervous system, reducing impulsive decisions. 3. Micro breaks. Take a 2-minute break after every few trades. It resets your brain. 4. Visualization. Imagine your ideal trader self, calm, confident, and consistent. This visualization eventually becomes your reality. Emotionally detached, mentally focused. Steenbarger says, be emotionally detached from outcomes but deeply focused on process. This means your focus should be on discipline and execution, not profit or loss. Because when the process is right, the results will take care of themselves. Now think, if emotional control is such a powerful weapon, is there a way to upgrade our mindset and become a peak performer trader? Chapter 5. Developing a high-performance trader mindset. Brett N. Steenbarger says, the difference between good traders and great traders is not in their strategies, but in their mindset. Mindset is that invisible edge that turns an average trader into an extraordinary one. In the market, survival depends not on strategy, but on mental discipline. What is a peak performance mindset? According to Steenbarger, a peak performance mindset means staying focused in every situation, making the right decisions, and continuously learning from your mistakes. It has 3 core pillars. 1. Clarity. 2. Control. 3. Consistency. Without these 3, no trader can last long. 1. Clarity. Understanding yourself and the market. Brett says most traders lose because they trade without self-awareness. You can't understand the market until you understand yourself, your strengths, weaknesses, and emotional tendencies. If you're impulsive, scalping is your enemy. If you're patient, swing trading may be your strength. Clarity in the market begins with clarity within yourself. 2. Control. Mastery over thoughts and emotions. Peak traders control not just charts, they control their minds. Brett says, pause for a few seconds before every trade and ask yourself, am I trading out of fear or greed? Am I following my plan or my ego? Traders who ask these questions don't fall for false signals. Control doesn't mean suppressing emotions, it means directing them. So control isn't about suppressing emotion, it's about channeling it in the right direction. 3. Consistency. Mindset built through habits. Mindset isn't a one-day decision. It's built through daily practice. Steenbarger calls it mental conditioning. Before the market opens each day, visualize. Today, I'll stay disciplined. I'll calmly analyze every signal. Over time, these affirmations get engraved in your subconscious mind, and discipline becomes your default setting. The power of self-talk. Brett explains that we constantly talk to ourselves, sometimes consciously, sometimes unconsciously. If you keep saying, "I always make mistakes," your mind starts believing it. But if you say, "I learn from every loss," your mind begins to grow that way. This is called psychological reprogramming, where changing your internal language changes your future. Building a high-performance routine. Steenbarger suggests building a daily routine that sharpens your focus and discipline. 1. Morning routine. Start your day with meditation or deep breathing. Read your trading goals aloud. 2. Pre-market preparation. Analyze market trends and key levels. Write down your top 3 setups and ignore the rest. 3. Post-market reflection. Spend 15 minutes answering these 3 questions. What did I do right? What did I do wrong? What can I do better tomorrow? This keeps your brain upgrading daily. The ultimate truth about mindset. Brett says, your mind is your most powerful trading tool. If you don't master it, the market will master you. If you don't gain mastery over your mind, the market will keep teaching you lessons the hard and expensive way. Now think, if mindset is the biggest key to success, is there a way to scientifically improve our mental performance, just like athletes do? Chapter 6. Mental Energy and Peak Performance Psychology. Brett N. Steenbarger says, trading is a mental sport, and your energy is your fuel. Trading isn't just about numbers or charts. It's a mental battle, where your energy levels decide whether you win or lose. What is mental energy? Brett says mental energy means the clarity, focus, and decision-making power of your mind. Traders who make more mistakes are often tired, distracted, or emotionally drained. When energy is low, the brain takes shortcuts, and that's the root of impulsive decisions. Tired traders don't make bad trades, they make lazy trades. Mistakes come not from fatigue, but from mental laziness. 3 psychological rules to preserve energy. According to Steenbarger, a trader's energy drains from 3 main sources. 1. Unmanaged emotions. 2. Lack of structure. 3. Poor self-care. And he offers 3 golden rules to fix this. Rule 1. Recognize your emotions. Don't suppress them. If you get angry after a loss, your mind enters defensive mode. The next trade becomes emotional. Brett advises, observe your emotions. Don't react to them. When you note your feelings, they lose their power over you. Example, I'm feeling angry because I'm afraid of losing. Simply acknowledging it cuts the emotion's power in half. Rule 2. Build structure so your mind doesn't wander. Unstructured trading is the biggest enemy of energy. Brett says every successful trader has an energy-efficient system. Fixed trading hours. Limited setups. Clear goals. Predefined exit rules. When everything is planned, your brain doesn't have to make constant decisions, and that saves energy. Rule 3. Self-care equals trading discipline. Many think discipline means only stop-loss or risk management. But Brett says, the first step to discipline is taking care of your mind and body. If you sleep poorly or stay stressed all day, your brain can't stay alert. 7 to 8 hours of sleep, meditation, or a 10-minute walk, healthy food and hydration, these aren't luxuries, they're part of trading psychology. Positive energy equals better focus. Brett explains that positive emotions, gratitude, curiosity, excitement, activate your brain's prefrontal cortex, which controls logic and decision-making. That's why if you practice gratitude daily, or see every trade as a learning opportunity, your brain stays naturally alert and focused. A happy trader is a focused trader. Real-life practice. Steenbarger gives a simple exercise. After every trading day, write down, how was my energy today? What distracted me? At which moments was I most focused? Within weeks, you'll notice patterns, when your performance peaks and when it drops. That data becomes your personal energy map. Energy management equals performance enhancement. To improve trading performance, it's more important to optimize your energy and mental state than to change your strategy. Because when your energy is stable, every setup, plan, and rule works smoothly. Now think, if mental energy is so critical, is there a way to enter that flow state where you perform effortlessly every single day? Chapter 7. Flow State. Effortless Trading Performance. Brett N. Steenbarger says something profoundly true here. The best trades happen when you are not trying too hard. When you're in flow, everything happens naturally. No force, no fear, no hesitation, just a rhythm where your mind and the market move as one. What is the flow state? Flow is a state where your mind is completely focused, calm, and confident. Every tick, every candle, every move is crystal clear, without confusion. Steenbarger calls it the trader's zone. In this state, there's no excitement, no fear, no doubt, just a steady awareness where you observe, not react. How to achieve flow? Flow isn't magic. It's a practice built on 3 elements. 1. Balance between challenge and skill. If the market feels too easy, you get bored. If it's too complex, you get scared. Flow happens when market difficulty matches your skill level. If the market feels a little more challenging to you, your mind naturally becomes alert. 2. Immediate feedback loop. Flow happens when you can see the result of your actions instantly. That's why trading charts are perfect. The outcome of every decision appears within seconds. But the key is this: don't emotionally react after seeing the result, just observe it as feedback. 3. Clear goals, no distractions. If your screen has 10 indicators, then flow is impossible. Flow comes from clarity. Set only one clear goal for each session. Today, I'll only take A+ setups. The less noise there is, the stronger your focus becomes. The relationship between flow and consistency. Flow isn't a temporary high. It's a consistent mindset. Steenbarger says, the flow state is not about getting lucky. It's about staying aligned with your process. That means when you trade every day with discipline and awareness, eventually your brain starts entering that zone automatically. Flow equals process plus calm mind plus repetition. Tips to stay in flow. 1. Spend 5 minutes deep breathing before every session. It stabilizes your mind. 2. Before every trade, tell yourself one line: I'm here to execute, not to predict. 3. When emotions rise, take a break. Flow never comes by force. Real-life example of flow. There was a trader who always missed big opportunities because he used to overthink. Steenbarger taught him just one habit: take a 10-second pause before every entry and simply observe the chart. Within 3 weeks, his accuracy improved because he had stopped reacting. He was in flow. The true power of flow. Flow connects you to the market but keeps you detached from ego. You don't take losses personally, and you don't let profits turn into overconfidence. Flow is a trader's ultimate weapon, because when you're in flow, trading stops being effort and becomes art. Now think about this. If flow can make your performance effortless, can we consciously create it every time? And if yes, how do we know whether we're truly in flow or just under an illusion? Chapter 8. The Secret of Continuous Improvement. Friends, believe this truth. Every great trader has faced terrible losses at some point. But the difference is, they turn those losses into lessons, and that's what sets them apart. Dr. Brett N. Steenbarger explains in this chapter that in trading, continuous improvement is the real edge, not strategy, not luck. Never stop learning. The first step to improvement in trading is adopting a learning mindset. If you made a profitable trade, don't just celebrate, ask yourself, what did I do right that worked? And if you took a loss, where did I go wrong? Steenbarger says successful traders treat every trade as an experiment, where the result doesn't matter as much as the insight you gain. Build a self-feedback system. A disciplined trader reviews their trades every week. They study data, identify patterns, and keep fine-tuning themselves. Steenbarger calls this habit a feedback loop. The more you analyze yourself, the faster you'll grow. A simple habit. Take 5 minutes daily and ask yourself 3 questions. What did I do right today? What went wrong? What can I do better tomorrow? The real enemy of improvement, ego. Ego is the biggest roadblock to improvement. The moment you think, I know everything, your growth stops. Steenbarger says the market punishes arrogance. That means those who stop learning don't survive long in the market. The power of small wins. Continuous improvement doesn't mean becoming an expert overnight. It means getting a little better every day. Today, avoiding one impulsive trade. Tomorrow, taking a better entry. These small steps create big transformations. Chapter summary. Learn from every trade, profit or loss. Track your performance. Keep your ego aside and seek feedback. Focus on daily small improvements. Do you know that some traders train their psychology so deeply that they remain calm even under extreme pressure? How do they do that? Find out in the next chapter. Psychological conditioning of a trader. Chapter 9. Psychological conditioning of a trader. Have you ever noticed how some traders remain calm even during the wildest market swings, while others panic and make mistakes? Dr. Brett N. Steenbarger says that true mastery in trading comes from mental control, not from fancy indicators or secret strategies. What is mind conditioning? Just like athletes train their bodies through daily practice, traders must train their minds. Every market move is a psychological test. Sometimes it triggers fear, sometimes greed. If your mind can't handle these emotions, your trading account won't last long. Steenbarger says, you don't trade the markets. You trade your beliefs, your fears, and your hopes about the market. In other words, before you learn to trade the market, you must learn to trade yourself. Step 1. Emotional awareness. The first step is self-awareness. Observe your emotions. Don't suppress them. When you take a loss, notice, do you feel frustration? When you make a profit, Does overconfidence rise? Don't just record trades in your trading journal. Also note your emotional state with each trade. Gradually, you'll start recognizing your emotional patterns. Step 2. Mental rehearsal, visualization. Top traders imagine every possible scenario beforehand. They ask themselves, what will I do if the market goes against me? If there's a sudden breakout, where will my entry be? This visualization helps the mind stay calm and prepared during real market conditions. Steenbarger says mental rehearsal builds emotional muscle. Step 3. Calmness practice, mindfulness. Mindfulness means staying in the present. When you're in front of the screen, your attention should be only on the charts, not on past losses or future profits. Observe every breath, every moment. That's trading meditation. This habit protects you from impulsive trades and sharpens your focus. Step 4. Stress management routine. Don't ignore stress. Manage it. Steenbarger advises that every successful trader has a de-stress routine, like working out, journaling, walking, or meditating. Resetting your mind after trading is just as important as building strategies. Chapter summary. Mind conditioning is the foundation of trading success. Recognize your emotions. Don't control them, understand them. Use visualization to stay prepared. Make mindfulness and stress management your daily habits. What if you could train your mind to enter a flow state every time you trade, where everything feels effortless and every decision feels natural? In the next chapter, we'll explore the flow state of trading. Chapter 10. The flow state of trading. Have you ever experienced a moment when everything was going perfectly? Every decision felt right, every move natural. No fear, no greed, just a smooth rhythm where everything flowed effortlessly? That's called the flow state. According to Dr. Brett N. Steenbarger, flow state is a mental zone where the trader's mind and the market move in perfect sync. It's a state where you don't just analyze the market, you feel it. What is flow state? Flow is a mental condition where time seems to slow down, focus becomes laser sharp, emotions become calm, and performance reaches its peak. Psychologist Mihaly Csikszentmihalyi defined it as, flow is the state in which people are so involved in an activity that nothing else seems to matter. In trading, it means you're not mechanically watching charts, you're understanding their language. How does flow form? Flow doesn't appear by chance. It comes from practice, discipline, and emotional balance. Steenbarger explains flow happens when 1. Challenge and skill are balanced. If the market feels too complex, fear arises. If it feels too easy, boredom sets in. Flow happens when your skill matches the challenge. If the market feels a little more challenging to you, your mind naturally becomes alert. 2. Clear goals exist. Before every trade, ask yourself, why am I taking this trade? When will I exit? What's my risk? This clarity keeps your subconscious mind calm. 3. Instant feedback is present. Flow is sustained when you instantly see results of your decisions. In trading, charts and price action provide that feedback. How to maintain flow? Steenbarger says, flow isn't a magical moment, it's a trainable habit. Remove distractions. Stay away from phones, noise, and chat groups. Build trading rituals, like taking deep breaths before opening charts or doing short meditation. Review daily. Analyze which trades brought you into flow and which broke it. Gradually, your mind will learn how to remain in that flow state. Flow versus overconfidence. Flow comes with confidence, but without ego. Overconfidence makes you forget risk, while flow keeps you calm despite risk. A mature trader knows the difference. Steenbarger's message: flow is not luck, it's your reward for consistency. That means the trader who shows up with discipline every day eventually reaches a zone where trading feels like meditation. Chapter summary. Flow state is the ultimate goal of trading. It happens when skill and challenge are balanced. Discipline, mindfulness, and review help maintain flow. Know the subtle difference between flow and overconfidence. If your subconscious mind starts detecting market signals automatically, without indicators or analysis, can trading become an instinctive art? Find out in the next chapter, Building Intuitive Trading Intelligence. Chapter 11. Building Intuitive Trading Intelligence. Have you ever taken a trade without overthinking, and it turned out perfectly right? Like some inner voice whispered, "Enter now?" Dr. Brett N. Steenbarger calls this phenomenon intuitive trading intelligence, a mind that reads market patterns subconsciously, not consciously. What is intuition, and where does it come from? Steenbarger explains that intuition isn't magic. It's the highest form of pattern recognition. When you watch charts for years, observe every candle's behavior, your subconscious slowly stores those patterns. Then, when the same pattern repeats, your brain instantly signals, "Something feels familiar here." That signal is your intuition. How intuitive traders think. 1. They feel rather than think. They read charts not as data, but as emotions, like the market feels nervous or buyers seem confident. 2. They connect with the flow, not just facts. Their focus is on the mood of price action. 3. They don't overanalyze gut feelings. They observe and verify them. How to develop an intuitive mind. Steenbarger offers a 3-step process. 1. Immersion. Spend quality time with charts daily. Don't just look at price, observe behavior. When did volume rise? When did buyers panic? When was the market calm? Repeated exposure shapes intuition. 2. Reflection. After each trading session, ask, when did I get a gut feeling? Was it right? Self-reflection sharpens intuition. 3. Feedback. Test your instincts. If a gut feeling made profit, note it. If it caused a loss, understand why. Slowly, your subconscious data refines itself. Caution. Not every gut feeling is intuition. Steenbarger warns, not every instinct is market insight. Sometimes it comes from fear or greed. That's why a mature trader never blindly follows a gut signal. They first ask, did this come from my experience or from emotion? Mindfulness and intuition. Mindfulness, awareness of the present moment, is the foundation of intuition. When you're fully present in the market, you can catch subtle signals from your subconscious. Steenbarger says, intuition speaks softly. You can only hear it when your mind is quiet. That means only a calm mind can clearly hear the voice of intuition. Chapter summary. Intuition isn't magic. It's born from experience and observation. Intuitive traders feel market psychology, not just analyze it. Verify your gut feeling. Emotions can mislead. Mindfulness amplifies intuition. If you can balance intuition and logic perfectly, can you become free from market noise and earn consistent profits? Let's discover that in the next chapter, Integrating Rationality and Emotion in Trading. Chapter 12, Balancing Rationality and Emotion. In trading, two forces are always at war, emotion and rationality. Dr. Brett Steenbarger says, if you trade only with your mind, you miss opportunities. If you trade only with your heart, you lose money. So the question is, can we merge the two to build the perfect trader mindset? Where the real battle lies, emotion's job is to signal, this feels risky, or this feels tempting. The rational mind's job is to interpret that emotion. Steenbarger says, emotion isn't the enemy, it's information. It shows how your perception connects to the market. What smart traders do: 1. They don't suppress emotions, they decode them. If fear arises in a setup, they don't panic. They ask, is this fear a market signal, or just my ego? 2. They don't make rationality emotionless, they know logic only works when emotions are calm. 3. They bridge thinking and feeling, combining emotional energy with logical clarity in every trade. How to turn emotion into a weapon. Steenbarger says that by repeatedly observing your emotional responses, you develop meta-awareness, the ability to observe yourself. Example, if you take revenge trades after a loss, meta-awareness stops you and reminds you, you're trading from ego, not logic. That awareness is the root of emotional control. The real meaning of rational decision-making. A rational trader isn't someone who's always calm, but one who connects thought processes with data. Steenbarger says, rational trading doesn't mean emotionless trading. It means emotion-informed trading. That means your feelings are also data. You just have to interpret them correctly. Practical ways to regulate emotions. 1. Deep breathing and pause technique. When market stress rises, take a short pause. Breathe deeply 3 times and look at the chart with fresh eyes. 2. Journaling. After each trade, record not just numbers, but emotions. How did I feel during entry? Was I anxious or excited during exit? 3. Review emotional patterns. At month's end, read your journal. You'll notice a recurring emotional pattern behind every loss. Identifying it is the first step toward improvement. The power of self-dialogue. Steenbarger says every successful trader talks to their mind, but positively. Like, I'm making the same mistake again. I'm learning what this pattern is trying to teach me. This subtle shift changes your self-perception and improves your trading performance. Chapter summary. Mastery comes from understanding emotions, not suppressing them. The rational mind works best when emotions are calm. Journaling and self-awareness reveal emotional patterns. The best traders balance emotion with logic, not one over the other. If you can make your emotions and rational mind work as a team, can you stay consistent under all market conditions? In the next chapter, we'll explore developing consistency and confidence as a trader. Chapter 13. The formula for consistency and confidence. In trading, consistency is what every trader chases. Everyone wants steady performance every week, but Dr. Brett Steenbarger says, consistency doesn't come from strategy, it comes from mindset. In this chapter, he explains how to train your mind to stay disciplined and confident in every condition. 1. The true meaning of consistency. Most people think consistency means winning every trade. But true consistency means following the right process in every trade, no matter the outcome. Steenbarger says, you can't control outcomes, but you can always control your behavior. That means, if you follow your rules, analysis, and risk plan every time, you're consistent, even if profits vary. 2. Where confidence comes from. Confidence doesn't come from motivational speeches. It comes from repeated right actions. When you keep making disciplined decisions, your brain starts trusting itself. Example, if you follow your plan even after losses, your brain learns, I'm in control. That internal trust is true confidence. 3. The power of routine and structure. Every successful trader follows a fixed routine: when to analyze, when to trade, when to review. This routine builds a habit loop in the brain, keeping emotions calm and performance automatic. Steenbarger writes, routine reduces uncertainty, and uncertainty breeds fear. That means, if you have a daily system, fear automatically decreases. 4. The micro-improvement system. Consistency doesn't come overnight. It's built through small, daily improvements. Ask yourself each day, what did I improve in my process today? This small reflection slowly turns you into a master. Steenbarger calls this the incremental growth model, where you aim to become just 1% better every day. 5. The art of emotional reset. The biggest threat in trading is emotional hangover, when past loss or profit controls the next trade. Steenbarger suggests, after each trading session, take a 5-minute mental reset. Take a deep breath, erase the previous outcome from your mind. View the next trade as if it's your first trade. This anchors your confidence in the present moment. 6. How to protect your confidence. Confidence is fragile. One bad trade can shake it. That's why Steenbarger says, attach confidence to effort, not outcome. If you traded with full honesty and preparation, even a negative result won't break your confidence, because you know you did the right thing. 7. Build a learning loop. Every successful trader runs a learning feedback loop. 1. Take the trade. 2. Observe the result. 3. Identify the mistake. 4. Create an improvement plan. This loop is the foundation of long-term consistency, because every mistake becomes a new lesson. Chapter summary. Consistency means following your process, not winning every time. Confidence is built through action, not affirmation. Routine and journaling help control emotions. Becoming 1% better daily leads to long-term mastery. Tie confidence to process, not outcomes. If consistency and confidence come from mindset, is there a scientific way to train your brain into that mindset? In the next chapter, we'll explore the science of peak trading performance. Chapter 14. The science of peak trading performance. Success in trading doesn't come only from strategy or tools, it comes from peak mental performance. That means your mind and body are both in an optimal state, where you execute every trade with a clear, confident, and calm mind. Dr. Brett Steenbarger explains in this chapter how a trader can scientifically train the brain to reach the flow state, a state where decision-making becomes effortless and sharp. 1. Peak performance equals mind plus body synchronization. Peak performance means your mind and body are working together. If you are physically tired or emotionally disturbed, your brain perceives risk incorrectly. Steenbarger says, your body sets the tone for your brain. A tense body creates a tense mind. That's why he recommends that every trader maintain a physical routine, such as yoga, deep breathing, or short walks, so the mind remains both alert and calm. 2. What is the flow state? The flow state is a psychological zone where you are completely in the present moment. No thoughts of the past, no fear of the future, only perfect balance between action and awareness. In trading, this state comes when you are neither too excited nor too fearful, just focused and detached. Steenbarger writes, flow is where skill meets challenge. Too easy, you're bored. Too hard, you're anxious. That means when the market's challenge matches your skill, you naturally slip into the flow state. 3. How to build flow through routine. Flow can't be forced. It must be prepared. Every successful trader has a pre-trading ritual, such as a few deep breaths, market review, emotional check. How am I feeling? These steps signal the brain that it's time for serious performance. Steenbarger says, preparation is the gateway to flow. 4. Self-awareness equals peak awareness. Peak performance arrives when you can observe yourself, meaning you can identify when you're being impulsive or overconfident. One way to build this awareness is performance journaling. Each day, write down, What were my best moments today? When did my focus break? How did I handle my emotions? This journaling trains your brain to recognize its own patterns. 5. Biofeedback and breathing control. Steenbarger explains that breathing is directly connected to the brain's emotional control centers. Slow, rhythmic breathing, especially with longer exhalations, calms your nervous system. He says, you can't trade your best when your heart is racing. So just 5 minutes of daily breathing practice can dramatically improve your trading performance. 6. Energy management, time management. Peak traders don't manage their days by hours. They manage them by energy blocks. The brain operates with limited energy.
Steenbarger advises.
Execute your most challenging trades during the morning energy peak. Take breaks or walks midday. Do reflection and journaling in the evening. This way, you work with your energy cycle, not against it. 7. Continuous calibration. Peak performance isn't a one-time achievement. It's daily calibration. The market changes every day, and you must adjust your behavior, focus, and energy accordingly. Steenbarger says, a trader is like an athlete. Performance isn't static, it's trained daily. Chapter summary. Peak trading performance is possible only when the mind and body are synchronized. The flow state comes from a balance of skill and challenge. Pre-trading rituals and journaling strengthen focus. Deep breathing and energy management enhance clarity. Performance is a skill that must be calibrated daily. If the formula for peak performance is so powerful, can it also be scientifically measured, like an athlete tracks performance? In the next chapter, we'll explore the Trader's Performance Lab, where success is turned into data. Chapter 15. The Trader's Performance Lab. In this chapter, Dr. Brett Steenbarger explains that a professional trader doesn't rely only on charts or news. They analyze their own performance data as seriously as a scientist studies experimental results. That's the mindset that transforms trading from an art into a science. 1. Treat trading like a science. Steenbarger says, the best traders are researchers first, risk takers second. Every profitable trader has a scientist within, someone who observes, records, tests, and improves. That means every trade isn't just a profit or a loss. It's a data point that can teach you where you are consistent and where you are weak. 2. What is a performance lab? A performance lab is a concept where you track, test, and tweak your trading. Just as an athlete records performance data, a trader should record entry/exit points, emotional state, market condition, win/loss ratio. Mistakes. Steenbarger says, what you measure, you can improve. What you ignore, you repeat. 3. Recognizing patterns from data. When you collect your trade data, you often uncover shocking patterns, such as you lose more on Mondays, you overtrade during news days, big wins come from a calm mindset. These insights refine your future strategy. A trading journal isn't just a diary, it's your mirror. 4. Testing hypotheses like a scientist. Steenbarger recommends that every trader turn beliefs into testable hypotheses. For example, hypothesis: when RSI is oversold and volume is high, reversals are more likely. Now test this setup 50 times. Does it really work? If not, adjust the setup. This process transforms emotional trading into logical trading. 5. Building a feedback loop. The main purpose of the Performance Lab is to create a continuous feedback loop. Steenbarger breaks it down into 3 steps. 1. Record. Write every trade in detail. 2. Review. Analyze weekly. 3. Refine. Correct behaviors for the next week. This loop turns trading from guesswork into a growth system. 6. Measure emotional data too. A performance lab isn't just technical, it's psychological. You should note how you felt during every trade. Calm? Fearful? Overconfident? Often, emotional patterns matter more than technical ones. Steenbarger says, you can't improve what you refuse to notice. 7. Metrics that matter. Key metrics every trader should track. Accuracy rate, percent of winning trades, average profit versus average loss, risk to reward ratio, emotional stability score, self-rated, trade quality index, based on plan adherence. Of these, plan adherence is the most important because consistency comes from discipline, not just skill. 8. Turning data into insight. Data becomes useful only when it produces actionable insights. For example, if accuracy is high but profit is low, right pointing arrow, you're cutting winners too early. If accuracy is low but profit is high, right pointing arrow, you're playing risk-reward well. This analysis reveals your blind spots. 9. Create your own trading dashboard. Steenbarger suggests every trader create a personal dashboard where weekly stats auto-update. This dashboard will tell you which setups are working, which timeframes yield best results, which emotions cause most losses, This system transforms you from an emotion-based trader into a performance-based trader. 10. The mindset shift. Steenbarger ends the chapter with a powerful insight. Your trading results are not your identity, they are your laboratory reports. A loss doesn't define you, it's simply feedback showing where your system can improve. When you treat every trade as an experiment, fear disappears, and growth begins. Chapter summary. Treat trading like a science, not just an art. Every trade is a data point that must be recorded and reviewed. Real improvement comes from hypothesis testing and journaling. Measure your emotional state, not just numbers. View losses as feedback, not failure. That's the pro mindset. If trading can be run like a laboratory, can a trader also reprogram themselves like a computer? The next chapter reveals Rewiring the Trader's Brain, How to Build Mental Resilience. Chapter 16. Rewiring the Trader's Brain. In this chapter, Dr. Brett Steenbarger teaches a deep psychological truth. Success in trading isn't hidden in charts or indicators, it's hidden in how our brain is wired, because we only see what our brain allows us to see. If our mind is programmed with fear, greed, and ego, we'll see only danger in the market, not opportunity. 1. The brain's operating system, Steenbarger says, your trading mind runs on habits, not on knowledge. That means it's not how much you know about the market. What matters is how your subconscious mind reacts. For example, if a trader feels fear after a loss, they'll hesitate next time, and that hesitation will eat into their next potential profit. The subconscious brain, the amygdala, sees every risk as danger, while the conscious mind wants to see it as opportunity. To succeed in trading, you must retrain your subconscious brain. 2. Neural rewiring, the science behind it. Steenbarger explains that our brain is plastic. It can change and reshape itself. This process is called neuroplasticity. Every time you repeat a behavior, such as following your plan despite fear, new neural connections form. Gradually, your brain starts viewing risk not as fear, but as challenge. That's rewiring, where emotions become your strength, not your weakness. 3. Start with emotional awareness. The first step of rewiring is awareness. Whenever you feel frustrated after a loss or overconfident after a profit, just observe it without judging yourself. Steenbarger says, you can't change what you don't acknowledge. Once you recognize your emotional reactions, you've already taken the first step toward controlling them. 4. Thought reframing. Change thoughts, change results. The second step of rewiring is reframing. Example. Before, loss means I failed. Now, loss means I learned. Before, the market defeated me. Now, the market showed me my mirror. This subtle shift changes your neural response. Fear turns into curiosity and calmness. 5. Positive reinforcement. Teach your brain what to repeat. The brain learns through repetition and reward. Each time you act with discipline, reward yourself, mentally or practically. Example. If you avoided an impulsive trade, tell yourself, I did the right thing. Steenbarger calls this building emotional muscle memory. Gradually, your brain starts repeating the behavior it associates with reward. 6. The power of meditation and visualization. Steenbarger recommends that every trader spend a few minutes daily on meditation and visualization. Meditation sharpens focus, and visualization programs your subconscious. Example. Each morning, imagine yourself calmly executing your setup, remaining composed despite losses, and never deviating from your plan. The more you visualize this scene, the more your brain stores it as a real experience, and eventually your behavior begins to change. 7. Identifying cognitive triggers. Every trader has mental triggers that cause impulsive decisions, like boredom, revenge trading, overconfidence, or anxiety. Steenbarger says, identify your trigger, and you neutralize half your mistakes. Rewiring means recognizing and neutralizing these triggers. So whenever an emotional surge comes, don't fight it. Simply observe and gently redirect your focus back to the plan. 8. Replace reaction with response. A rewired trader doesn't react instantly. They pause, analyze, and then respond. That pause is your edge. When others panic in market chaos, the rewired trader stays calm and trades with clarity. Steenbarger says, between stimulus and response lies your power, your freedom. 9. Daily mental conditioning routine. To make rewiring permanent, Steenbarger suggests a daily routine. 1. Morning visualization. Imagine your perfect trading day. 2. Pre-trade affirmation. Say to yourself, I will trade my plan, not my emotions. 3. Midday check. Ask, am I centered? 4. Evening reflection. Write, what did I learn today? Where did emotions take over? This routine gradually disciplines your subconscious. 10. The new you, a calm, focused trader. When rewiring is complete, your behavior transforms. Losses no longer cause panic. Profits no longer make you arrogant. News no longer confuses you. Trading stops being stress. It becomes flow. This is what Steenbarger calls trader's enlightenment. Chapter summary. The brain runs on habits, not knowledge. Neuroplasticity lets you change thought patterns. Emotional awareness and reframing control fear. Meditation and visualization reprogram the subconscious. Daily conditioning turns discipline into second nature. When a trader's brain is fully rewired, can they sharpen their intuition to use it as a trading weapon? The next chapter reveals developing trader's intuition, the sixth sense of the market. Chapter 17. Developing trader's intuition. In this chapter, Brett Steenbarger discusses a concept common among all successful traders: intuition, that inner voice that points in the right direction without calculation. But the question is intuition just a gut feeling, or is there real psychology behind it? Steenbarger says, true intuition is not magic. It's the result of massive experience processed subconsciously. That means intuition isn't a supernatural power. It's the result of experience, observation, and pattern recognition that the brain has repeated so many times it can now make correct judgments instantly, without conscious thought. 1. The real meaning of intuition. Our brain has two systems. System 1, fast, automatic, emotional. System 2, slow, logical, analytical. Intuition comes from System 1, which processes thousands of subconscious experiences in milliseconds to produce a feeling. Example: an expert trader looks at a chart and immediately says, "This stock is about to fall." That's not magic. Their brain instantly compares thousands of past patterns and forms a decision. 2. Experience, the raw material of intuition. Steenbarger says, you can't have intuition about something you haven't mastered. If you haven't practiced enough, your intuition is just guesswork, not accuracy. Every time you study charts, observe market reactions, and learn from mistakes, your subconscious records those patterns. Gradually, those memories become your sixth sense. 3. Pattern recognition. Understanding the market's language. The market speaks daily through signs, price action, volume spikes, reversals, traps, and expert traders feel the trend through them. According to Steenbarger, intuition is actually subconscious pattern recognition. A disciplined trader doesn't treat intuition as a random feeling. They verify it with data. In other words, intuition triggers the idea, logic validates it. 4. Calm mind equals clear intuition. If your mind is filled with fear or greed, your intuition becomes distorted. Steenbarger says, emotional noise drowns intuitive signals. So intuition works only when the mind is calm and centered. Meditation, breathing exercises, and journaling help sharpen intuition. Because when the mind is quiet, you can finally hear the subtle signals of your subconscious. 5. How to train intuition. Steenbarger gives some practical steps. 1. Pattern journaling. Write down which patterns appeared in your profitable trades. Note the mistakes in your losing ones. This accelerates your subconscious pattern recognition. 2. Replay sessions. Each weekend, replay old charts and guess where the market might have moved. This strengthens your brain's prediction ability. 3. Feel the market. Before every trade, ask yourself, is the market calm or tense? This helps you understand emotions and market psychology. 4. Post-trade reflection. After every trade, note whether you acted on logic or intuition, and which was more accurate. Gradually, your mind learns to distinguish between the true inner voice and fear's voice. 6. The balance between intuition and logic. Intuition is powerful, but if left unverified, it can lead to overconfidence. Steenbarger calls this balance. Feel the market, but verify with data. Intuition gives you direction, logic gives you confirmation. When both synchronize, your accuracy multiplies. 7. Signs of true intuitive trader. A true intuitive trader can be recognized by these signs. He can instantly sense the trend just by looking at the chart. He is not impulsive. He tests his gut feeling, doesn't follow it blindly. He accepts losses fearlessly. And above all, he stays aware of when his intuition is reliable and when it is not. Such traders don't just understand the market through numbers, they understand it through emotions and the flow of energy as well. Chapter summary. Intuition is the result of subconscious experience and pattern recognition. A calm mind can hear intuition. Practice and journaling strengthen intuition. It's essential to verify intuition through logic. True intuition is the one that gives repeated accuracy. If intuition is so powerful, can a trader sharpen it to the level where they can feel a market turn before it happens? In the next chapter, we'll explore flow state trading, when the mind and market become one. Chapter 18. Flow state trading, when the trader and market become one. In this chapter, Brett Steenbarger talks about a psychological level where a trader forgets their chart, strategy, and emotions and completely enters a state of flow. In this state, the trader doesn't think about trading, they feel it. This state is called the flow state, where every move and every decision feels natural and effortless. 1. What is flow state? Steenbarger says, flow is the state of complete immersion in the process, where time slows down and performance peaks. Flow happens when you are completely present, distractions disappear, and every decision instinctively feels right. For example, think of a surfer balancing on a wave. He doesn't calculate every wave, he feels it. In trading too, when you tune yourself into the rhythm of the market, you are in flow. 2. How does flow happen? Flow isn't magic, it's born out of consistent practice and emotional balance. According to Steenbarger, flow happens when 3 things perfectly align. Challenge level. The market's difficulty is neither too hard nor too easy. Skill level. The trader has mastery over their strategy and tools. Focus level. The mind is fully present, free from past or future worries. When these 3 are in balance, the brain automatically shifts into flow mode. 3. Flow versus overtrading. Many traders mistakenly think that taking constant trades means they're in flow. But Steenbarger explains, flow is not about taking more trades, it's about taking the right trades with total clarity. Flow is about clarity, not rush. Every trade feels natural, not forced. Even amidst market chaos, your mind stays calm. 4. Emotional stability. The root of flow. To enter flow, your emotional state must be extremely stable. If you're in anxiety, greed, or fear, you can't enter flow. Steenbarger says, the mind cannot flow when it's fighting itself. That's why mindfulness, breathing, and journaling are preparations for the flow state. These exercises bring the mind to a calm level where it can sync with the market. 5. Signs you're in flow. You can tell you're in flow if you lose track of time. Every trade feels effortless. Emotions feel neutral. You notice even tiny market movements clearly. Your performance feels at its peak. In flow state, you don't predict the market, you move with it. 6. How to trigger flow. Steenbarger gives a few practical steps. Pre-trade ritual. Have a short routine before every trading session, like 5-minute breathing, market scan, and goal review. It shifts your brain into performance mode. Clear rules, free execution. Define your rules first, then give your mind freedom during execution. This keeps your conscious and subconscious in perfect alignment. Avoid distractions. Phones, notifications, and noise instantly break flow. Keep your trading desk distraction-free. End on a high note. When you're performing at your peak, recognize it and close the session. This way, your brain sees that state as a reward and tries to repeat it in the future. 7. The connection between flow and creativity. In flow, your mind rises above logical thinking and shifts into creative thinking. You start simplifying complex charts, feeling the market's energy, and sometimes spotting patterns others can't see. Steenbarger says, flow turns trading from an effort into an art. 8. How to maintain flow. Flow is a fragile state. If you become overconfident or fearful, it breaks. That's why every successful trader develops both self-awareness and detachment, meaning no pride in winning, no sorrow in losing. In flow state, you are connected only to the process, not the result. 9. The ultimate benefit of flow trading. Trading in flow means fewer trades, higher accuracy, almost zero stress. Your mind and the market move together in perfect rhythm. In this state, you achieve effortless profitability. Chapter summary. Flow state is the highest level of performance. Complete synchronization between mind and market creates flow. Emotional calmness and focus are the keys to flow. In flow, trading becomes art, not struggle. If flow state is so powerful, can a trader activate it on demand? In the next chapter, we'll learn how to repeat your peak performance every single day, creating a routine of excellence. Chapter 19. Sustaining success. In this chapter, Brett N. Steenbarger explains that achieving success in trading is difficult, but maintaining it is even harder. Many traders perform well once, but months later start repeating the same mistakes, due to overconfidence, complacency, or failure to adapt to changing market conditions. Trading success is a process, not a destination. Brett says, success is not a permanent state. It's a process of continuous improvement. A successful trader challenges themselves every day. Am I trading better than yesterday? Am I identifying my mistakes faster? Am I making emotion-free decisions? Such daily introspection keeps you from becoming stagnant. 3 essentials to maintain success. 1. Self-awareness. Understand yourself. Know your emotional triggers, biases, and behavioral patterns. For example, if losses make you frustrated, recognize it early so that frustration doesn't affect your next trade. 2. Adaptability. Markets always change. A strategy that works today might fail tomorrow, so a trader must stay flexible, keep learning, backtesting, and adjusting. 3. Community and mentorship. According to Brett, successful traders never grow alone. They build a support system. Trading groups, mentors, or accountability partners keep you grounded and reveal your blind spots. Performance Journal for continuous improvement. Brett introduces a highly effective tool, the Performance Journal. In this, you don't just write your trades, but also note your thought process behind each trade, how your emotions influenced your decision, what you learned. Such journals make your growth measurable. Balance is the key. The author says that maintaining success requires not only charts and numbers, but also lifestyle balance. Sleep, health, and relationships directly affect your trading psychology. If you're mentally drained, even the best strategy will fail. In short, to sustain trading success, discipline, awareness, adaptability, and life balance are your greatest weapons. As Brett says, the best traders aren't the ones who win once, but those who learn to keep winning again and again. Chapter 20. The Trader's Development Plan. In this final chapter, Brett N. Steenbarger says, every successful trader has a well-defined development plan. Just reading charts or understanding indicators isn't enough. For long-term growth in trading, you need a structured self-improvement roadmap, just like an athlete follows a training routine. Step 1. Define your vision. Every trader must know clearly. Why are you trading? Is your goal financial independence, a full-time career, or wealth creation? When your vision is clear, every decision aligns with that direction. Without vision, a trader merely reacts, not plans. Step 2. Identify core strengths and weaknesses. Brett says every trader has certain natural advantages. Some are patient, some analytical, others quick decision makers. You must first understand what your trading edge is. Then refine that edge and gradually improve your weaknesses. Example: if you take impulsive trades, apply a wait for confirmation rule. If your risk management is weak, use a fixed position size strategy. Step 3. Create a structured learning routine. The author suggests that successful traders never stop learning. Fix a weekly learning block that includes reviewing market analysis, reading trading psychology notes, analyzing your performance journal. This routine keeps your growth consistent. Step 4. Build a feedback loop. Every trader must measure their progress. Brett recommends weekly review. Analyze your 3 best and 3 worst trades. Monthly reflection. Identify behavioral patterns. Quarterly goal setting. Set new skills and targets. Feedback shows whether your development is heading in the right direction. Step 5. Focus on mindset, not just market. Steenbarger repeatedly emphasizes that trading is a mental game. Your emotional balance, focus, and confidence are far more powerful than the market itself. That's why meditation, journaling, and relaxation must be part of your development plan. You can't control the market, but you can always control how you respond to it. Step 6. Integrate life and trading goals. Trading becomes sustainable only when it balances with your lifestyle. If you're sacrificing your family, health, or rest, your success is temporary. So include everything equally in your development plan: financial, emotional, and personal growth. Final message. Brett concludes by saying, a trader's journey is not about reaching a final goal, it's about constant evolution. The more you understand yourself, the better your market decisions become. Your real weapon isn't a strategy, it's your self-awareness and discipline. And that's the core philosophy of enhancing trader performance. Be your own coach. Observe yourself. Keep evolving. Friends, you've seen it now. The difference between traders who win and those who lose isn't strategy or luck, it's self-awareness and discipline. If you learn to understand your emotions, analyze your behavior patterns, and treat every trade as a learning experience, you're already ahead of 90% of traders. Remember, no one can control the market, but controlling yourself is entirely in your hands. And that's the real power of a disciplined and aware trader. So next time, before you open your chart, ask yourself just one question: am I in my best psychological state today? If yes, the market will start bending in your favor. If you liked this video, don't forget to like, share, and subscribe, because here we learn the real science behind trading. The science of mind, not just money. See you in the next video, where we'll explore even deeper secrets of the trading mindset. Until then, stay disciplined, stay profitable. Quote,